Good morning. It's Friday, September 6th, about 6 a.m. Central Time. Overnight, the precious metals are edging higher after Thursday's snapback recovery in gold, silver, copper, and platinum. The S&P 500 fell for its third straight trading session. In the overnight, we're down about 0.5% here, down 33 points at 54.79. So clearly, traders are concerned ahead of today's payroll data. Yesterday, we saw ADP show a disappointing 99,000 jobs created versus 144,000 expected. Gold futures spiked on that type of news, and shortly after, we had the initial claims data come out where it showed 227,000 jobs created versus a 231,000 expected. The equities ripped and then they slipped. So many of you that are working with us closely have had put options and also shorts on the U.S. equity markets. Congratulations to you. You had also lifted quite a bit of those positions into the close here yesterday, capturing some of those gains. Now, looking at the overnight price action on gold, I said that prices would most likely move up to 25.50 and anchor around that level coming into this data release. We're trading at 25.48, up about $6. Real tight trading range in the overnight session, only about $9. Similarly, you go to the December silver contract, 29.13 last, up about 3 cents. Real tight range as well. 29.23 on the upside, 29.01 on the downside. Is 29 some level of support? Perhaps small psychological support, but it's really the middle of yesterday's trading range. You look at December copper up 175 at 415, and also October platinum up $1.80 at 931. If you're going to trade platinum again, I suggested that you focus on the January contract to give you the maximum amount of time. And then looking at the other markets here, no big standouts. Crude oil just a little bit higher, Bitcoin slightly higher, dollar index slightly lower. Really the big concern here is the NASDAQ, which is down about 1%, where a lot of people are heavily weighted in those baskets of different Magnificent Seven stocks. So looking at what's coming out here today, the economic focus. Clearly, we've got the Bureau of Labor and Statistics. They're going to release the August jobs data. Economists forecast an expectation of 164,000 jobs created after a disappointing increase of 114,000 in July. We do expect the unemployment rate to edge lower to 4.2% from 4.3%. So this data release will be critical in determining the size of the Federal Reserve's interest rate cut later this month. Going to the CME's Fed Watch tool, the expectations here on September 18th is for a 59% chance that the Fed only cuts 25 basis points. The expectations for a 50 basis point cut is 41%. So I had a gentleman call me yesterday, and he was quick on the phone, and he said, hey, what is silver going to do once the Fed cuts rates? Well, a couple things here. One, that's September 18th. We're only on September 6th. There's quite a bit of time between now and then. There's quite a bit more data releases. And also, we need to pay mostly attention to industrial data, things that are coming out in China. Remember, if you're trading silver futures, you're not trading just a precious metal. You're trading an industrial metal. It's 54% an industrial metal. So if you start to take some of these correlations, and if you really want to be a bit more calculated, but also a bit more archaic about your strategy as far as trying to determine what the price increase on silver would be coming into the Fed's report. So let's say if that data release here was today. You can look at gold and historically back testing since 1980. Gold futures have risen about 6% on average after the Fed goes on an interest rate hiking cycle. The first cut in that when they switched to dovish and they cut the first time, within 30 days, historically gold on average has gone up about 6%. You take the gold silver correlation right now, which is about 87% the price correlation, you'll come up with 5.22%. You times 1.0522 times where gold futures or where silver futures are at, which is about $29, and you'll come up with 30.54. So if someone was going to ask me right now, I would say that I believe that gold futures or silver futures are going to go up to 30.54 within the first 30 days of that first interest rate cut. So the problem with coming up with that type of hypothesis at this point in time is that silver futures on average move 87 cents a day. You take 87 cents and you divide that into $29 and you get 2.8%. So silver futures are moving 2.8% per day. So realistically, we could be anywhere at that point in time. We're going to need to address that when we get closer towards the the Fed's meeting here on September 18th. I suggest that you start to look and measure and map things on a chart basis and come up with your plan of attack there. So if you look at silver futures, again, I did suggest yesterday that it made a lower high. We bounced off the 200-day moving average in early August, and then here in early September, we did come close, but we were a little bit higher. The other problem, the flip side, what I left out on that, is that we've had a series of lower highs on the chart. So what silver's doing is it's moving into a triangular pattern at the moment, and yesterday we failed at the 50-day moving average. Silver futures need to get above 30.14 in order to break out and at least get back to a neutral trend, because remember, silver's in a bearish trend right now, and it's heavily anchored towards copper prices. Much of its recovery yesterday was a combination of the rise in gold futures and also the rise in silver futures. Now, looking at the gold market, that's really been your best play here as far as it's had lower volatility. It's been cycling itself a bit higher. Some of the support levels have held, and most of the psychological support is held as well. We have central banks also buying gold. A lot of other players out there are also adding to their gold positions. Gold futures had a small correction this week, but they were able to resurge and come back up to the 25.50 level. So all eyes are on the 7:30 data release. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.